Matt, okay, big news here, as is with every quarter. Berkshire Hathaway's 13F came out. That's the SEC form that gives us an idea of what they are buying, what they're selling. You wrote an article here recently on Fool.com that gave us some great insight there. Talk to me a little bit about Berkshire's 13F and what stood out to you.
Well, we knew this was a fairly active quarter for Berkshire. In its earnings report, we saw that it spent something like $14 billion on stocks. But there were a few things that really stood out. One, Berkshire invested in Oracle, which was a new position and kind of shows how Berkshire's embracing technology recently.
And embracing his own brand, too, right? I mean, he's the Oracle of Omaha. You may as well own some Oracle, huh?
I wonder if that had anything to do with it. The other big thing that stood out was bank stocks. Not just that Berkshire bought one bank, they initiated a $4 billion position in JP Morgan.
Wow.
But that Berkshire upped its position in pretty much every major bank stock it owns, with the exception of Wells Fargo. It bought almost 200 million more shares of Bank of America, 24 million shares of U.S. Bank, another 5 million shares of Goldman, which was its biggest percentage increase for the quarter. It increased its Goldman stake by 38%. Bank of New York Mellon. And Berkshire, there's a couple of things to kind of take from this. Number one, Berkshire can't own any more than 10% of a bank, which is why he's kind of branching out into new big bank positions like JP Morgan and selling a little of his Wells Fargo every quarter. He needs to maintain that stake a little under 10%, which it is. Bank of America now is very close to being a 10% stake. Goldman's not quite there yet, but some of his smaller ones are. And JP Morgan's one that he could, buy another $20 billion worth and not be close to the cap yet. So in my opinion, that's why he decided to buy JP Morgan. It's a great run, a very well-run bank, and he has a lot of room to expand his position, and Berkshire really needs to spend billions of dollars to move the needle. But just kind of the general theme of buying bank stocks, in all, we don't know the exact price Buffett paid for all these, but he spent close to $15 billion on bank stocks during the quarter. And that's he already had an overweight position in banks. So why is Buffett buying so many banks? Well, one, it's been a big underperformer of the S&P. Banks were a huge beneficiary of tax reform. A lot of the banks that when we've discussed their earnings, have earnings up, 40, 45% year over year. And the main reason for that is tax reform. Banks pay pretty much the maximum corporate tax rate. And banks have yet to really realize the benefit of the rising rate environment. We mentioned that, banks, their profit margins go up as interest rates go up, which tends to happen. But so far, the Fed's raised rates about 8 times, and we're yet to see really that kind of rate movement on the long end of the yield curve, meaning like on mortgage rates and things like that. So banks are yet to realize the profit potential from that. It's still generally a deregulated banking environment, a business-friendly banking environment, if you will. Even though the Democrats took back the House, we're not likely to see any significant new banking regulations come to be with a Republican in the White House and a Republican-controlled Senate. So a pretty neutral regulatory environment. And it should just be a very nice climate for growth, given how well the economy is doing. Most banks are posting very good loan and deposit growth. Great numbers when it comes to like defaults and charge-offs. Asset quality is looking really good. So it's just a really great growth environment for banks. And the market really hasn't really given banks the credit for it to be a great growth environment. So it looks like Buffett just kind of sees some unlocked and unrealized value in this sector, and that's what he's betting his money on.
Well, and it makes sense. I mean, we have an economy that is obviously very credit-driven, and when that is the case, I mean, these are the big banks that are really out there helping a lot of that money move around in one way, shape, or form. And I mean, to your point about J.P. Morgan Chase, I mean, we are big fans of that company, obviously, one of the bigger banks out there doing more and more with the capital it's able to gather. And I think Jamie Dimon has proven to be really a very forward-thinking CEO. And not only that, but Buffett and Diamond, along with Bezos, working together on that healthcare initiative to try to help cut costs and improve healthcare within their own companies, and hopefully bring some of those learnings out to the greater corporate society. So, I mean, I think that all makes sense. I mean, I did want to follow up with you on one thing here. So, with the Wells Fargo position, because we've been obviously very critical of Wells Fargo for some time here now. But the cutting of the Wells Fargo position there, you think that really is more related to not hitting that 10% mark as opposed to throwing down the gauntlet and saying, you know what, we're sick and tired of your culture problems there and fix it, or we're going to start weaning our way off of your position in our portfolio?
Right. That's a very good question. First, a couple of points. First of all, Buffett came out about a year ago and said, we have no intention of getting rid of Wells Fargo. We are going to start selling to keep our stake under 10%. Berkshire's stake is a little over 9%, and Buffett also owns some Wells Fargo in his personal portfolio. So combined, he has to be very careful that it doesn't give him 10% control. Second, Wells Fargo, because it has been a big underperformer, is buying back its stock very aggressively, which is making Buffett's stake naturally go up over time. So each quarter for the past few quarters, Buffett's had to sell a small percentage. I think it was a little under 2% of the Wells Fargo stake he sold this quarter, but a small percentage each quarter. And each time it happens, a few weeks later, Buffett has come out and said, we believe in Wells Fargo. They made a mistake. Last quarter, he actually said he believes Wells Fargo will be the best performing of the big four over the next 10 years. So he's come out in support of Wells Fargo many times as a long-term investment, has said he has no intention of getting rid of it from the portfolio. And we've seen this consistent pattern of selling to kind of maintain the stake at a certain level over the past, 3 or 4 quarters now.
Well, all right. We will wait until next quarter to see what the trends continue to look like there.